Okay, so you got your license, or you have a child that just got a license. You've got a new teenage drivers. Holy crap, it's expensive. Okay, so today in this video, we're just going to get right into it. I'm going to teach you how to get the lowest prices on insurance when you're either a teen or adding a teen to your current policy. So the current price, if you're a teenager starting off completely new, you bought a car, you're going to have your own insurance, it's a year-long policy. The average cost for a teen driver on their own is anywhere from $2,200 on up. It can be a little bit lower depending on the state, but in most average across the U.S., you're looking for between $2,200 to $2,600 per year. That sounds like a lot, and it is a lot of money, but if you divide it, let's just say it's an average of $2,400, that's about $200 a month. The average for teenage crashes, and this is why the insurance is so expensive, is between ages 15 and 19, 15 and 19 out of the whole age of your life, is 4 times more likely to get in a car accident than age 19 to 25, 25 to 65, and then 65 it gets more risky or riskier, they have more crashes. Essentially when you hit 25, that's kind of the cutoff where your prices start going down. When you hit 50, they go down a little bit more. When you get to 65, they start creeping up, and then the older you get, the more, the younger you are, the more. So it's kind of in that sweet spot. So if you have a teenager, you're trying to add them to your policy, or if you're a teenager yourself, let's just dig into the options, and I'm going to go through and recommend a few companies. So if you're a teenage driver or you're trying to insure your teenage drivers, I'm going to go through some of the tips that you're going to need to get the best prices. At the end of the video, I'm going to show you my results when I searched and found the average cheapest companies. So I'm going to list the top 4 companies and the reasons that they're really competitive with teen drivers. As always, if you get good information on this video, don't forget to smash the like button. If you guys want to know more about insurance, you're just interested, you love it, it's sexy, it's awesome, or you just want to get tips and learn how to save money on your insurance, which out of these videos should be a lot. If you don't know insurance by the end of my videos, I am sorry. I failed you. Hit the thumbs down, unsubscribe, all that. But if you do like it, subscribe. Starting off, the things that are going to help you with the prices is if you're a student. So if you are a student, you can get discounts for being a good student. That's a B on average or a 3.0 or higher on your last grade report. If you can show proof of that, because they will ask, then that's going to qualify you for a good student discount. It's not a huge discount. You're probably going to get 3 to 5% off, but it helps. Every little piece that we add into here is going to add up to get you the best rates. On top of that, not just being a good student, if you're a college student and you're going under your parents' policy, then what's going to happen is your parents can apply for what's called an away at school. The requirement for that, and everywhere I've seen, is 100 miles or more. So you have to live within 100 miles, and they'll ask for the zip code and the address to the school, and they'll calculate, okay, is it 100 miles or more? If it is, great, you're going to get a pretty large discount. Now, what a lot of companies will ask you is if the vehicle is kept on campus. So it is less of a discount if you're going to keep the vehicle with you versus if you're going to leave a vehicle or you don't have a vehicle to bring with you and it's at home. So there's less chances of you coming home. You're going to be there on vacations and Thanksgivings and all that stuff, and then you're going to drive the vehicle. So they're going to lower the risk a lot because you're not close to the vehicle as often as you normally are. Like I said before, be aware of age. So between 15 and 19, that first age range, that's the riskiest piece. So you just gotta get older, grow up, right? I don't know. So when you're 19 to 25, it does go down a little bit. You're gonna notice about a 10% drop. By the time you hit 25, you're gonna notice 20 to 40% less. It depends on the company you're with. That's why I say the range. But you're going to notice that much less expensive when you get 25, and then so on and so forth. The number one way to save the most money, and this is for parents, and ask your parents, is to go on their policy. Everybody thinks it's cheaper to get you a cheap car, do PLPD, which is personal liability and property damage. That's what most states, 90% of the states, require you to carry, state minimums, right? Get the cheapest thing possible, credit card, drive it, it's going to be cheaper. That's not the case. You can buy a decent car, do PLPD as well, have good coverages, so if you hurt someone, you have good bodily injury limit, and that will be cheaper 99% of the time than you going off on your own. Because you got to remember, when you're under your parents, you've got your parents, they're the primary. So when the policy comes into force, they're looking at only your parents, and they've got 30, 40 years of driving history, right? That's crediting them, as long as they have good driving records. So you've got your parents here, and they've got good driving history, good record, good credit, they've built it. And then you're just a driver underneath. So that risk isn't as high versus you're the primary, you're 19 years old, you own your car. That's going to be the cheapest. Absolutely the best way to do it. If you guys don't know what I just mentioned about bodily injury limits, don't forget to watch my most popular video, Understanding Insurance 101. It's about 20 minutes long. I'm sorry, it's detailed. Enjoy. The vehicle choice is also important. So if you're going to buy an older vehicle thinking, okay, it's going to be cheaper because I'm going to get just a beater car, right? In most cases, sure, if you're going to drive a 95 Toyota Corolla, that's going to be a lot less expensive. But when you start getting into the stuff you want to drive, so you want to drive a 2014, 15, 18, 19, whatever, right? You want a newer vehicle, make sure that it has all the safety features. Yeah, most of the cars nowadays are gonna have them. So 2010 on up, odds are they've got anti-lock brakes, they've got anti-theft device where it disables the car if someone tries to steal it. They've got seat belts that lock, the locking seat belts. They usually don't make them where they're motorized anymore, but that used to be a discount. But you've got all those extra features, brake assist, things like that, that actually lower your rate. You have no control over that, so when your agent plugs in your VIN number, it's going to automatically pull that information. The only thing that I would recommend is when you're talking to them, if you have a security system, let them know. If it's one that tracks the car, that's even better. So like a lot of BMWs and a lot of Chevys and GM vehicles have OnStar. And so you can do that where if someone stole it, you can call them up and they'll be like, oh yeah, it's sitting right over here down in the corner. Call the police, get your car back, right? So this really isn't a discount. This actually costs you more money, but I recommend it. One thing to think about, a lot of companies offer what's called accident forgiveness, and it is worth it. If you think you're the perfect driver, great. Skip it, move on. If you're just learning to drive, I highly recommend you get accident forgiveness for at least your first accident. That way, if you do have something happen, you won't be just slammed with prices. Because think about this. You're adding $100 to $200 a month just because you're 19 or younger or 25 or younger, right? And so what's happening is your prices are high. You had one ticket or one accident, you're going to double that price. You're going to pay $400 a month if you're lucky because of that. Because the risk is just huge. If you have one, the chance of having a second one go up. And the fact that you're young, it just adds up. So if at all possible, get accident forgiveness on the policy. It is going to cost you a little bit more money, but it's worth it just in case. And when you hit 25, if you feel it's something you want to remove, then by all means do it. So the top 4 companies that you should start looking at. Because I don't know what state you live in, I can't tell you which company is best. Feel free to ask and I can give you some pointers too. But what I would recommend is finding a local agent or an agent that's licensed in your state. They don't have to be local anymore. That can quote multiple companies. Like I work with a company that does 17 different companies. That's a big reach. I usually sell the policy whenever I quote someone because it's a huge portion of the market. Even if I put you with company A and their rates go up or you have a ticket, a lot of times company C, D, or E will also give you a good price. So you have options if things happen. Now the companies here, I'm not necessarily recommending because I don't know what state you're in, but this is the average across the US. I did a little bit of research and I found out who averaged the best prices for teen drivers. Now I'm not necessarily recommending them mainly because I'm not digging into their details. I can give you the thoughts of what I know, especially since I actually use 2 of these companies with where I currently work. Take that for what you will. These are the companies that popped up the most with giving the better prices. AAA. I personally came up with that myself, mainly because the best part about AAA is they base your driving off of mileage. So if you're a teen and you're not going to drive a lot of miles, maybe 5,000 to 6,000 miles a year, you're going to get a lower price. Also, they take the best credit for states that they can use credit. They take the best one in the house. I've quoted customers that have had mom and dad had like a 600 credit or insurance score, they call it, and son, even though they didn't have any credit, for some reason the credit bureau says they have 700. Just because they have no debt, they have a little bit of credit, and it gave them a better rate. So by son having a better credit score, it actually bumped up the savings so that they didn't have to pay more. Also, the last piece is because they offer what's called a AAA drive, and that's one of those monitoring systems. You don't actually plug it in your car. It's based off your cell phone. So what happens is if you're going to drive, you can download an app and they will give you a discount based on your actual driving records. Kind of like the Root Insurance company that I reviewed back here. They do it based off of driving history more than they do other factors. Next up is Geico. They just generally have really good rates. The general prices of Geico have always been competitive. So if you're in Florida, you're in Texas, you're in all of those main states. I personally, when I was licensed there and competing with them, because they were my competitor, always had trouble beating their prices when they were teen drivers. So they're typically going to give you a pretty decent rate, especially if you're a government employee. That's what Geico stands for, Government Employee Insurance Company. I'm 99% sure that's right. They give military discounts, and it's big. So if you're part of the military, part of the government or anything like that, you're naturally going to already get a better rate. But if you're adding a teen driver to it, it's going to be less than the standard company that doesn't offer those discounts. And then other things that they do, which almost every company does, is you get discounts for airbags and anti-lock brakes and safety features and good students and good credit and all that stuff. If you do want to learn some more discounts, go ahead and check out my top 15 discounts video there. It's pretty in-depth. It's fairly short, but it goes over all the best discounts that you guys can apply for. Erie Insurance. There was 2 reasons I came up with this one. Is because they do offer accident forgiveness. There are a lot of other companies that do, but they were one of them that popped up a lot when I was searching for young drivers' best prices, right? So Erie Insurance came back fairly well, but also I think the biggest reason is because when you're going under your parents' policy, this is kind of a caveat, so if you're not going under your parents' policy, they're probably not going to be the best fit, but what they do is they give an actual discount when mom and dad are insured with them and they're adding son or daughter. So they're actually saying, okay, we don't want to lose mom and dad because odds are it's cheaper, so they're going to shift over to another company. So we're just going to give them a pretty good discount and just assume and just track how well their kids do. And if the prices go up or down, it's going to be based on how well they can keep that family household as one unit. And when I say discount, in certain states it's only 5%, but in a majority it goes as high as 20% off. So adding son, daughter, teenager, whatever, under mom and dad's policy, it's a potentially large discount. And the last company is Progressive. So I actually use this as a company between AAA and Progressive. Those guys are really good for these situations. Not always the cheapest, but they do come in very, very competitive, I'd say the majority of the time. Part of it is because they want to grow. They understand the way the industry is. They understand the majority is going to be millennials, so they're focused on that type of client. The reason I'm saying this is their profile is lower. So when you look at risk, they don't have as much of a risk. They've got a larger pool for everybody to be in, so they're able to keep the rates a little bit lower. But also, they do give all those standard discounts. Away at school, a good student, if you have an education, they're given a discount for that in the states that allow that. The last reason is exclusions. So if you're having trouble getting insurance for your son or daughter, or you don't want to be part of mom and dad's insurance, you're going to find the issue you're going to run into, and this is a majority of the customers that I get. So out of 17 companies, I would say at least 10 of them won't let you exclude your family members. They're in the house, they have access to the car, whether you like it or not, they could take the keys and drive, right? They have to think worst case scenario because this has happened to them. They see it every day. A lot of companies make you add the entire household, not necessarily as primary drivers, so it doesn't affect you as much as you have to have it, but it does hurt you, so you have to pay an extra fee for that. Well, in Progressive, you can exclude people completely. So if you're a son and you don't want mom and dad to have access or be rated on your policy at all because mom and dad have bad driving records, or vice versa, if you're mom and dad and you just can't find insurance for your daughter and she just wants to go get her own, that's great, but I don't want my policy to go up because she's in the house. So I can exclude her and say, I don't want them to be, they're never going to drive my car. Keep in mind, you have to understand that if any reason, emergency, not emergency, your daughter drives your car, she's completely excluded. She has an accident, none of your coverages cover her whatsoever. Your car's not covered. You're guaranteeing that they will not drive the vehicle. Anyways, guys, I hope you got good advice from this. Don't forget to subscribe if you want to get more tips and videos and make insurance awesome stuff from me. Thumbs up if you liked it. Definitely share it if you know anyone that could get good advice out of this. Otherwise, I will see you guys in the next one.